Good morning, traders from each and every part of the world that you're joining this series of the daily morning market call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global markets to access various financial assets. Now, today being on the 7th day of the 4th month of 2025, that is April, a lot has been happening, especially last week, that is going to be determining market direction moving forward. But all eyes are on Trump's tariffs, or what is termed to be reciprocal tariffs by the United States, which is an initiative by the Donald Trump administration to try and get better deals, to try and check and balance the balance of trades, which is simply means to try and get a better deal or better deals with countries that they are in trade agreements with. Now, this has had the market rather dramatic. This has had the market rather not lack volatility. We have seen some amazing, unusual moves in the financial markets, and we are going to be exploring them across various financial assets. But before I proceed, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video, to mean that you can access this YouTube video at your own free time by going to YouTube and searching HFM Kenya. Kindly do not forget to click subscribe and like, share also, so that it can get to more and more people. And it is our commitment to you that while doing this, we will improve on education to fill the gaps that are there in the financial markets in regards to dependable information. Let's now look at the tariffs. Before that, beginning with our usual steps of looking at economic and geopolitical forces, which fundamental analysis, what is moving the market. We have been seeing a shift ever after the swearing in of Donald Trump as a president of the United States in January this year, and we have seen a shift from monetary policy to economic to fiscal policy. What I mean by that, monetary policy could be said to be the end tail of economic data, which moves the market, which is what is before you. We could find this data on HFM platform by going to hfm.com, going to tools and education, then economic calendar. You will be able to find the economics of different countries, and this helps us in determining market direction across various assets. But there's been a change in this from monetary policy to fiscal policy. Fiscal policy basically details government budgets and spendings, government policies which affect the economy. Now, why has there been a slight shift in monetary policy and to fiscal policy? This is because the man in history, Donald Trump, has had some ideas which he promised during his campaigns that he's now implementing. One of the big ideas that has been moving the market at this day and time in history is the Trump's tariff. The Trump's tariffs has had also influencing economic data, so it would be much more tentative to pay attention to these tariffs and what do they mean. But before we proceed, let me share what some of those tariffs are, so that we get a bigger picture, so that into the year, once these tariffs are revised or perhaps retracted or advanced, we'll know how to use them. Now, quick summary. What is tariffs? Tariffs are taxes on imports. The United States is reviewing the taxes they put on imports while they deal in trade with other countries. A good example of this is China. China's tariff, the United States was paying taxes of 67% to China. Now, the United States has revised the tariffs to 34%. Remember, this is reciprocal tariff to mean the United States is reviewing. If you tax me high, I tax you high. If you tax me low, I tax you low. If you're aggressive on your taxes, I'll be aggressive on mine too. If you're conservative on your taxes, I'll be conservative on your taxes too. Now, China seems to have had the biggest blow. USA putting in a reciprocal tariff of 34%. And remember, China taxes the United States 67% on their imports. That is overall generally calculated by an informed index. Now, the United States has slammed back China with a 34% tariff. The European Union taxes the United States up to 39%, generally through the index. And the United States has slammed back with a 20% tariff. Before we proceed, I would like to bring it to your attention that there was an overall tax tariff of 10% on generally every country which transacts with the United States. That does not exclude countries in the East Africa region like Kenya, Tanzania, and Uganda. Basically, in summary, because we would not have time to go through all this is a picture representation of the reciprocal tariffs, which the United States called the Redemption Day, where they reviewed their trade agreements to attempt to impose also tariffs which they seem would be fair, which would make a lot of sense in economic terms, because if you tax me 90%, it's only fair if I tax you slightly high and I increase to 46%, like we see in the cases of Vietnam. Somebody would ask why this variance and high taxes that other countries have been imposing in the United States is because the United States is the largest global economy. In short, the circulation of money compared relatively to other developed countries, the United States consumer appetite is extremely high and is a good market, could be considered a good market. Now, two reactions from this as the aftermath. Number one, these countries that the United States has revised their tariffs will choose to renegotiate, or secondly, they would choose to also impose tariffs on the United States. Right? Let's see, go to the charts and see the implications of this. Very nice. Beginning with the chart before us, this is the oil asset, which is under the commodities in asset classes, and we had a reaction from the area of interest at $71.92 per barrel, and price of oil tanked or became bearish aggressively, breaking lows, printing to the downside. A scenario that we see is in continuation today, again affected by the Trump's tariffs. Before we talk much more about this, let's look at what gold did, which was surprising. Gold also broke the low, retesting key area of interest, attempting to retest the key area of interest at 2954.52, and prices attempting to print to the upside. We would be cautious with commodities at this particular time in place, because naturally commodities were there in reference to gold when we have tensions and fears in the world, which is now brought about by what is currently happening, which is the taxes imposed by the United States on other countries that they are in trade agreements with, should be printing bullish like it has showed done in the past, right? But what happened, it printed bearish. Now, would wait to see the highs to be taken out and the tension to seemingly cool down for us to have a clear market direction in this regard. If you go to a much more lower time frame to see what is happening, 4 hours, We see that price is attempting to consolidate, which can easily be seen on the daily time frame. Would wait for price to take out the highs so that fundamental analysis could align with technical analysis from past historical events. Remember, this is not the first time we are having fears and tension in the markets. This has happened a couple of times before. But this market was not only affecting commodities in a bearish trajectory. If we go to stocks, beginning with American stocks, we see that we tanked bearish drastically. The fears and tension are seemingly appearing to be less optimistic to investors and traders, removing their money from baskets of stocks. This is US 100 composed of majorly tech stocks because the tariffs comes with repercussions to stocks. What repercussions are these? It diminishes the value of individual stocks and therefore by extension basket of stocks. A scenario that you're also going to see on S&P 500, opening with a gap, bearish, opening with a gap. US 30 seemingly also behaving the same, and this is affecting everybody. When you go to European stocks and we look at the DAX, perhaps in future I should also add the UK 100 to be looking also at it. We see we printed bearish. It's affecting everybody because the Trump's tariffs are not only targeted for US linked companies, but also global companies. Remember, we just saw that in the European Union, we had a 24, let's recheck it again. European Union, where German 40 exist and the 40 companies, we had a 20% slam back from the 39% that they charge on United States. Now this is having the the DAX 100 print, the DAX 40, beg your pardon, print bearish because these companies are affected. It would be nice to wait for this cool off to come down because the market is reacting from the perceived sentiments of market participants, and waiting for it would help us determine clear market direction. However, for scalpers and day traders, they would take advantage of this and seemingly attempt to get quick scalps. If we look at currencies to have a much more lower low and medium term view of the power of the United States dollar, we see the United States dollar weakened drastically. This is the Euro USD. To imply the weakening of the United States dollar, having the Euro USD print bullish, giving us confidence to attempt looking for buys across the week as we cover high impact news and also geopolitical forces that moves the market. That this is for US dollar quote currencies, having the US dollar coming in second. For US dollar, USD card, where we see the US dollar coming first at US dollar based currencies, we see that it printed bearish to allude the fact that the United States dollar power was challenged, a scenario that we are going to be looking into the week as we observe economic and geopolitical forces. And speaking about economic forces, we are having the CPI print this week. As much as we are paying attention to economic forces, we also do not fold our eyes to economic forces which print day in, day out to give us much more information. However the case, it is important to remember to observe risk management, and if this is your first time to interact with the financial markets, perhaps go to hear a few jargons. Kindly attempt to visit hfm.com, register for an account. You'll fill in your details, contact details, and our experts will get in touch with you if you're stuck in the process, to help you proceed. And by any chance, this is not financial advice. This is purely meant for educational purposes. It is important to do your due diligence, and until tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. Until then, take care and God bless you all.